Welcome to this explainer. Okay, we're just going to dive right in today because we need to address the absolute elephant in the room for all of you lecturers, professors, and administrators at Universitas Brawijaya. We are talking about your paychecks. Specifically, why those paychecks might suddenly be looking, well, a little bit lighter these days. Now, a recent tax socialization event at UB brought together some top legal and tax experts to really decode this massive shift. So we're going to break down exactly what happened, why it's happening, and most importantly, what you can actually do about it.
Here is our roadmap for today. We're going to cover the new UB'x tax era, the legal reality from Dr. REY, the TER deduction system, the mystery of the December underpayment, and finally, some really smart tax strategies from Mr. FUNGSIAWAN.
All right, Section 1, Era Baru Pajak UBI, transitioning to PTNBH. So I know a lot of you have been staring at your pay stubs lately and thinking, wait, why are my tax deductions suddenly changing? And look, it's a completely valid frustration. For years, things are totally predictable. But recently, Universitas Brawijaya officially transitioned into a PTNBH, which is a Perguruan Tinggi Negeri Badan Hukum. Essentially, this means UB is now an autonomous legal entity. And as you might guess, with that level of autonomy comes a completely different and much more complex set of tax rules. To really understand this, let's look at the core difference. In the old era, your income as a civil servant was largely subject to what's called a final tax. It was great because it was just a simple, flat deduction. Maybe it was 5% or 15%, and boom, you were done. But the new era, it essentially treats UB like a corporate entity. Because of this, a huge chunk of your income is now subject to PAJAK tidak final, or non-final tax. That means all those different earnings are lumped together and subjected to progressive, corporate-style deductions all year long.
Let's move to Section 2, Penjelasan Hukum Dr. REY, the legal reality. At the event, Dr. Alessandro REY dropped a philosophy that was a bit blunt but honestly absolutely necessary. He said taxes cannot be avoided, they must be faced. You see, when people notice smaller paychecks, the gut reaction is usually to point fingers at the university's payroll department, right? Like, hey, you guys messed up my math. But Dr. REY made it crystal clear. This new progressive tax is a strict statutory requirement from the national government. UB is legally obligated to make these deductions. It's not a glitch in the system, it literally is the law.
And Dr. REY gave a very serious warning regarding your book to Patong, your tax withholding slips. You cannot just take these slips, toss them in a desk drawer, and forget they exist anymore. Legally speaking, if you passively accept that tax slip without raising a flag, the government assumes you 100% agree with their calculation. If there's a mistake and you just let it slide, it becomes your legal burden if you ever get audited. You absolutely have to review your documents actively.
That brings us to Section 3, Memahami Sistem Potongan TESER, the mathematical shift. You have probably heard the acronym TER getting tossed around a lot recently. It stands for Tarif Efektif Rata-Rata. Tax consultant Mr. FUNGSIAWAN broke this down beautifully. He explained that TER is essentially a non-negotiable monthly tax deduction table handed down by the government. It's based entirely on your personal status, things like whether you're married or how many kids you have. It's meant to simplify the payroll process from January through November. But here's the kicker. It is not your actual final tax calculation. It's really just a temporary estimate. Your true final tax is actually based on a progressive staircase. Unlike those old flat rates we used to love, your non-APBN income now has to climb this ladder. So the first 60 million rupiah is taxed at a modest 5%. But as you earn more, let's say you get research grants, special incentives, or journal publication bonuses, your tax rate climbs to 15%, then 25%, all the way up to a massive 35% for the highest earners. So literally every extra rupiah you make pushes you closer to that next heavier step. Which leads perfectly into Section 4, Mystery Kurang Bayar December, the end-of-year shock. Okay, here is the exact math on why December is so incredibly painful. Step 1. From January to November, the university is taking out taxes using that simplified TER table we just discussed. Step 2. December arrives, and the government requires all of your income, your standard APBN civil servant salary, plus your non-APBN university incentives to be mashed together. Step 3, when they finally apply that progressive tax staircase to your total combined annual income, it almost always shows that the TER table didn't deduct nearly enough during the year. The result? A sudden, massive recalculation and a huge kurang bayar underpayment bill right before the holidays. No thank you.
But, and this is absolutely crucial to understand, Universitas Brawijaya saw this disaster coming and they actually created a solution for you, the Tabungan Pajak, or tax savings. You've probably noticed UB holding back a little bit of extra cash from your paycheck every month. They aren't just taking it, they're parking it in a dedicated savings pool for you. That way, when that terrifying December tax bill finally hits, UB just uses your savings to pay it off, completely shielding you from a month where your paycheck might otherwise literally drop to zero. They're padding the fall.
Let's get to the really good stuff in Section 5. Strategi Pajak Bapa Fungsional, taking back control.
So we're pivoting from the problem to actual empowerment. Mr. FUNGSIAWAN laid out some incredibly actionable strategies. But to build a strategy, we first have to map out where your money is actually coming from. For UB staff, there are 3 main buckets. Bucket 1, APBN, final income, like your base certification, that's already handled, don't worry about it. Bucket 2, UB non-APBN income, like university incentives, that gets hit by the progressive tax we just talked about. But bucket 3 is your outside income. We're talking speaking gigs, consulting, freelance work. This third bucket, this is where you actually hold all the strategic power.
Enter the NPPN strategy. NPPN stands for Norma Penghitungan Penghasilan Neto. If you do any outside consulting at all, you need to log into the DJP Online portal before March 31st every single year and file for this specific status as an independent professional. Why? Because if you do this, the government essentially hands you a 50% discount. They will only apply that heavy progressive tax to half of your outside income. But if you miss that March 31st deadline, you are stuck paying tax on the full 100%. It's a massive difference.
Now, if you want to be a real power player, look at this comparison. If you use your personal NPWP tax ID for outside gigs, you get hit with those progressive rates, which could be anywhere from 5% up to 35%. However, Mr. FUNGSIAWAN highlighted a genius workaround. You can set up a PT Perorangan, basically a one-person limited liability company. It only costs around 50,000 rupee to set up. Once that's active, you just invoice your outside clients through the PT, and suddenly you only pay a flat 0.5% UMKM tax rate on your gross revenue. It's totally legal, and it's an unbelievable shield for your side income.
Finally, there is a critical structural strategy for married couples. If a husband and wife maintain separate NPWP tax IDs, which is known as Pisa Harta, are filing separately, the tax office will literally combine both of your incomes, apply the absolute highest possible progressive bracket to the total, and then split that massive bill between the two of you. It is a complete trap. FUNGSIAWAN strongly advises that if the wife only has one employer, it is almost always mathematically better to just close her NPW and merge it with her husband's. By doing that, her income is treated as a finalized tax, totally shielding the family from that huge progressive spike.
We've covered the shifting laws, the new math, and some serious strategies today. But none of this makes a bit of difference if you don't take action. So I want to leave you with this one provocative question. Have you actually checked your book to Patong this month? Because the PTNBH tax era is officially here at UB, and taking control of your financial knowledge is no longer just optional, it's absolutely necessary. Go check your slips, map out your income streams, and start applying these strategies right away. Thanks for joining me on this explainer, and keep learning.